Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now.
Wouldn't it be nice to just buy a stock and let it pay you back forever in the form of a growing dividend? Well, I wanted to highlight 4 companies that I think investors can buy, just set it and forget it, and collect the dividend that they're paying out for the foreseeable future. Let's get into what those 4 stocks are and why I like them. The first one I want to highlight is Taiwan Semiconductor. Now, this is a stock that had a dividend yield over 3% as recently as a couple of months ago, but it came down because Warren Buffett came in and bought a big chunk of the stock. That caused investors to rethink their valuation of Taiwan Semiconductor, but I think this is still a great buy and hold investment. The company is the biggest chip maker in the world, and it has a great strategy because it focuses on just making chips. So it's not vertically integrated the way that Intel has typically been in the past. It's actually just a contract manufacturer of chips. So companies like Apple, Nvidia, they do the design of the chips. Taiwan Semiconductor builds the foundries, builds the factories, and that is where those chips are made. So it's a very complex process, but those companies don't want to own their own foundries and become chip makers. They put that on a company like Taiwan Semiconductor. So very valuable position in the value chain. That's why it has grown as quickly as it has and why it pays a healthy, although not large dividend at 1.7% right now. This is one that I would like to add at a little bit higher dividend yield, but long term, I think those dividends and earnings are going to grow. So still a great buy and hold dividend stock forever. The second one that I like that maybe a little bit contrarian is Target. Target, I think, has done a really good job in the retail space. With the growth of e-commerce, the question has always been, what does the role of brick and mortar look like in the future? And I think Target has really showed what that can look like with products like Drive Up and Shipped and even pick up in store. Now at Target, you can order online and simply drive up to the store that are conveniently located in urban areas in particular. That has really changed shopping. So now instead of ordering things and getting them 2 days later from Amazon or another retailer, you can go and pick even groceries up in a few hours with Target. So I think that's a really great position for them to be in. And I don't see any competitors coming in and taking that spot from them. Even Walmart is kind of competing in different regional areas than Target and kind of a different price point as well. So I really like where Target is sitting. Now, recent quarters there's been a little bit of pressure on the company because coming out of the pandemic, they basically got their inventory purchases wrong. When people were staying at home, they were spending more on things like outdoor furniture. So Target obviously ordered more of that product to have it in stock for consumers to purchase. Remember, there was a lot of shortages earlier in the pandemic. But when people started going back to work, kids started going back to school, they changed their purchasing habits. And so Target had the wrong inventory. That's why we've had a couple of bad quarters in a row from Target. It'll take a little while to sort that out, but the stock now has a 2.4% dividend yield. I think the way that the company is positioned it going forward in the retail space is really solid. This is a dividend that should keep growing slowly but surely over time, so I'm comfortable just buying and holding it for the next few decades. Another set it and forget it company is 3M. Now, 3M is a manufacturing company. They have manufacturing plants all over the world. They don't make a ton of exciting products, and there haven't been major innovations in their product line over the last 10 or 20 years, but just a steady performer, 4.7% dividend yield. That's something that I think we can count on, especially as we see more and more manufacturing moving back to the US. Now, about 70% of 3M sales have been international, so this is a company that has a lot more exposure internationally than you might think, but it has always been a US-centric company. So as we see manufacturing moving back to the US and they're trying to produce things more locally, I think 3M is actually pretty well positioned for that. There's also not a lot of disruption in a lot of their markets. And the disruption that we have seen over the last couple of decades have come from places like India and China, which are having their own challenges with rising costs and then political tensions between particularly the US and China. So I think 3M is pretty well positioned to continue to grow on the manufacturing base that they have in place. You're getting a dividend yield over 4%. I think just set it and forget it and let that grow over the next few decades. And the final company is another company with decades of visibility. That's Brookfield Renewable Partners. This is a company that buys energy assets that have long-term contracts to sell electricity to utilities. And so they have predictable cash flows. They know exactly what the cash coming in is going to be. They know how to structure their debt as a result. Investors are getting a 4.4% dividend yield. I think that's pretty solid, and it's going to slowly but surely rise over time. Management has says they intend to increase that dividend 5 to 9% per year, with the goal of a total return for investors between that 12 to 15% range. Now, if any company can generate a 12 to 15% return long term, that's going to be a market crushing stock. So that's why I like Brookfield Renewables. I think there's a lot of tailwinds behind the renewable energy business. This is one of the leaders. Brookfield has been a great capital allocator, and so that's why it's one of the best companies to follow in this space. They're great at buying assets on the cheap and just buying and holding them long term. So that's why I like Brookfield Renewables. You're getting a solid dividend. I would just set this one and forget it. It's a great way to get exposure to energy and renewable energy. So Brookfield Renewable is the fourth stock on my list. Let's go through those again. Taiwan Semiconductor, Target, 3M, and Brookfield Renewable Partners. What do you think about these as buy and hold forever stocks? I'd be interested in your comments below. Give this video a like and follow Rive Investing for more investing insights and thoughts in the future. Thank you so much for watching, and I will see you here next time.